Okay, so to demonstrate the cost tracking steps, as discussed earlier, here is a cost tracking template. As you can see here, there are different tabs that you can use. Production plan, purchases, item usage, and so on. So the first step is to do an initial cost estimation, as mentioned, right? So this is a sample formula to produce, one standard size of pizza. Let's make it larger. So the following are the ingredients, then the total cost per unit, standard cost per unit. Then we have this total ingredient cost, the labor cost to produce this, and the total variable/direct cost of 115.99. Okay, so to track this, let's say, for example, you create a production plan. So here's the date, batch code. So the batch code is like the reference number for this particular production. So the SKU code is the product, target quantity is 20. Say, for example, the volume projected is 20 per day. So usually you create 20, standard pizzas per day. So the budget here is basically based on the formula of one yield. So pretty much the quantity specified here will be multiplied by 20, right? Because of the target quantity is 20. Okay. So the total cost to produce the 20 pizza is basically this much, right? So next step is to record, or accurately record all direct costs associated with the pizza production. So first is the purchases. The purchases are the purchases of the raw materials, you order from your suppliers. So usually your source document there is PO and the GRN, or goods received note, or RR number, which is the templates are also available for downloads under forms folder. So on every receiving report, ideally, it has to be recorded in this worksheet. You enter the date, the supplier, the reference number, RR number, then the item code. So assuming that we have ordered all of the materials specified here, right? So, but take note that the unit is usually the buying cost of products are in bulk, in this specifically in kilograms. But our formula for the ingredients are in usually grams. So take note of the conversions. So once the goods are received, so ideally these are recorded here together with the total cost, right? So remember in module 2 we discussed about the recording of inventory in and out, and it's how to compute for the cost. So the examples that we're going to do here will be based on average cost. So again, based on module 2, each time you receive goods, your inventory item ledger or stock ledger should be updated as well. So I won't be discussing it here, but yeah, basically every time you receive, you update your item ledger as well. Okay, so now we have the items with us. So the next step is, since the production plan requested for this number of quantities of raw materials to be issued, we don't have a template for the item usage. So ideally, the warehouse or stock control clerk should issue all the units or quantity or the volume of raw materials needed by this particular batch. So it's usually recorded as a material issuance slip from the warehouse, taking out all of these ingredients for the production of the day. So we also already have a computed unit cost here, and the total consumption cost based on the by multiplying the total quantity and unit cost, right? Okay, so after that, um, you also, since labor is part of the direct cost, you should also ideally log the labor hours to produce the finished goods. So in this case, again, related to batch one, who's the employee, what is the employee's hourly rate, the number of hours logged to produce, and the total, which is the multiplying rate and the hours. Okay, so another step is to allocate indirect cost. So you go to your overhead log where you record the total rent and utilities that is allocated for this particular batch. In our next module, we're going to discuss more about cost overhead allocation. Okay, so once these are recorded, well, ideally at the end of the day or real time, if you go back to the production plan, we're gonna have like the record of the actual quantity issued, cost per unit, and the total cost, right? So there might be cases where the actual quantity issued is different from the budget, or for example, the cost is different from the actual and the budget. So in this case, for example, I intentionally change the unit cost of the floor. The ones indicated here is 50 pesos per kilo, right? But the budget, it's says here, it's 40 pesos. So 50 and 40. So there's a difference. So there should be variance in this particular computation, right? Okay, so if you compute for the total, but for example, in this case, in the floor, the total cost in actual is 250, but in the budget is only 200 because the actual PO price is 50 pesos per kilo. Okay, so if we're going to scan here, there's also a difference in the labor. Okay, if you go to the labor hours, is supposedly just 20 pesos or 400 pesos in total, but here we exceeded the number of hours to 7, so hence there's a difference in the actual total labor cost. So if you total it, as you can see here, there's a difference or variance of 210 pesos budget versus actual. So as discussed earlier, it is important to regularly monitor cost reports to compare actual cost with the budget. So these reports can help identify variances and make necessary adjustments accordingly. Say for example, some reports, you compare the actual ingredient and labor cost against the budgeted amounts. All right, so our last tab here is basically the summary or the final cost analysis. So at the end of each month, you do this to assess the overall cost performance. So this provide reports to evaluate profitability and inform the management for future budgeting. Okay, so as you can see here, the budgeted revenue is 180, the actual is 180, but the materials, there are discrepancies, the labor, there's discrepancies. So the budgeted gross profit is 85,000, but the actual is 79,000. So there are things that you can decide upon, by analyzing this one. Like for example, increasing your price, lowering your cost, or adjusting your sales and marketing mix. So thank you so much, and I'll see you in the next lesson.